Hello, ladies and gentlemen. Greg Michalowski of ForexLive.com. We'll take a look at two currency pairs, the Aussie versus US dollar and the New Zealand versus US dollar. They've been in a free fall of late. Why? Because China growth is slowing. US growth is perceived to be slowing as well. And stocks are getting hit. All that leads to, stocks and commodities for that matter, have all getting hit. That leads to selling in those currency pairs who are influenced by not only commodities, but also growth in China and the U.S. That's three strikes and you're out, and that's why we're seeing these pairs move lower. So let's take a look at the technicals that are driving this currency pair in this video. Let's get started. Looking at the 4-hour chart in the Aussie versus U.S. dollar for this week, it's been down goes Fraser, and the price has broken below the 100 and 200-day moving averages in trading here today. Note yesterday that the price low came in right near the 200-day moving average, so there's hope that the price could bounce. Also near that level is a 50% retracement of this move to the upside from the low price that we saw in April to the high price that we saw in July, and this swing area right here. So there's a lot of cluster of support here in trading yesterday, and it looked like we might bounce, but we couldn't get above the 100-day moving average, and things started to rotate to the downside in trading here today when we fell below the 200-day moving average, fell below the 50% retracement, fell below the low of this swing area. Things started to kick to the downside even more, and we started to see a rotation through the 61.8% retracement before bouncing to the upside. We are seeing stocks rebound. The NASDAQ index is now down, only minus 0.10%. It was down minus 1.75% at its low, so we're seeing a big, huge bounce in the NASDAQ index, which may be helping the rebound in the Aussie versus US dollar as well. So what next? Well, we're in between the this key what was support, now resistance on the top side, and we're also above the 61.8% retracement with the current price trading at 0.6544. Sort of in nowhere's land for the Aussie versus US dollar. However, if we do take a look at something like the 1 or the 5-minute chart in this pair, that's going to show the little nuances of the price action. And what we've seen as the market trends to the downside is things like the 100 bar moving average holding resistance through here. Also the 200 bar moving average. Then we started to move a little bit above that 100 bar moving average, and we were able to get above both the 100 and 200 bar moving averages through here. But note here what happened up here. We are finding sellers against the 100-day moving average, and when the price started to move back below those two moving averages here, what did we do? We started to move to the downside. So it showed you the way from a technical perspective with the 100-day and the 100, 200 bar moving averages on this chart holding up. So what have we seen on this rebound? Well, we got back above the 100. We got back above the 200. So we're at that point where, if the price wants to go higher, it potentially can, but we need to stay above these moving averages right through here. More specifically, I'd love to see for the 200 bar moving average to hold support and the price to rebound to the upside from here. If we can do that, then the first step in recovery can get a technical boost. If we also get above the 50% retracement of this last move to the upside, that would be another step that would give the buyers a little bit more confidence. So this level, 38.2, 50%, all key levels that we need to get above in order to improve the bullish bias in this currency pair. Let's take a look at the New Zealand versus US dollar next. And again, I'm going to start with the 4-hour chart. And we look at this currency pair. Last week, we started to do damage below the daily charts. We fell below the 100-day moving average here after trying to hold support. Then last week, we also fell below this trend line right through here. That increased the bearish bias as well. The selling increased this week with the price just going down. And when we broke through the 61.8% retracement, I'm going to get rid of this Fibonacci retracement right here. When we got below the 61.8% retracement right here at the 0.59927, I warned that or speculated that we could go down and test these lows right through here. And indeed, in trading here today, we came down to a low of around 0.5881. It looks like that was just about 8 or so pips short of this low right here at 0.5873. The low price for the year came in at 0.58516. So got within sniffing distance of these lows before we started to see a rebound to the upside. Now the rebound to the upside has been a little bit more modest compared to, let's say, the Aussie versus US dollar. And you can see that a little bit in the 5-minute chart. Here, remember on the 5-minute chart in the Aussie versus US dollar, we are above the 200 bar moving average. In this case, the price has not been able to get above the 200 bar moving average. We're going to need to get above that level at 0.59118 on this short-term chart to give even the short-term buyers a hope that the price can continue its move to the upside. If we can't get above those levels, then guess what? The buyers are not in control. So Aussie's trying to make a play to the upside. New Zealand versus US dollar still pressured. That's my technical look at these currency pairs on today's date, July 25th, 2024. Good fortune with your trading. Bye-bye now.